Welcome back. You're watching Indian Open on BloombergQuint Live. Let's see how the Asian markets are faring. Not too well. Remember when we started the show, we told you that Asia was awash with red, and across the bourses, Nikkei, Shanghai, Hang Seng, Kospi, Straits Times, Australia, everything has a bit of a red tick to itself. And the SGX Nifty too, for now it's steady around this 29-30 point down tick. But let's see if it starts sub 12,000. It did dip below that point yesterday before moving up. Let's see if it starts sub 12,000, and then if it stays below that, then what could happen? I think our technical experts will dwell on that in a bit. But, well, the derivatives position will also tell us something about the trade yesterday in the near term. Navneet is back to tell us about what are the larger F&O indicators and not just on Yes Bank. Navneet, what else stood out in trade?
Well, Neeraj, last three sessions, while we've been closing in the red, and since the time December series has started from Friday, there is more of profit booking which is coming in after hitting those record high levels in last week. So looking at yesterday's session, of course, on the cash side, we did breach the 12,000 mark. In fact, the closing also came in at 11,994, but the futures continue to trade above that mark. The premium went up to almost 52 points, and no major build-up coming by when it came to futures. While the Bank Nifty futures did witness some bit of unwinding in trade, the open interest was down about nearly 3%, and the premium on Bank Nifty futures also rose from those levels of 45 to 50 to yesterday's closing of about 98. Volatility yesterday was high, so you had the India VIX, which closed off day's high. It also surpassed that level of 16 yesterday, but the final closing came in at 14.5. And looking at the put call ratio for Nifty across all series, that fell to level of about 1.3, indicating there was more call writing which came into the system in yesterday's trade. And looking at the distribution across the option strike, what's the level you can watch out for today's session? So 12,100 call is sitting with maximum open interest, while on the put side you've got the 12,000 strike, and this has been the case since the time this weekly option expiry began on Friday. So the range is quite narrow. We've breached already the mark of 12,000. Not only that, yesterday actually we also breached the 20 DMA, which is somewhere about 11,970 thereabouts. I think that should be your first support. If we breach that mark, if we trade below that, probably the recent low of 11,918 is something you should watch out for. While yesterday there was call writing at 12,000 strike, and the put writers of 12,000 mark, since we closed below that mark, ran for cover. In terms of individual stock futures, then there were a lot of stocks which did witness some action. Among the Nifty constituents, Bajaj Auto was up 3%. Fresh long positions were seen. Max Financial has been in focus, and this closed at 52-week high. Long positions seen for this stock as well. Bata, despite of selling pressure which came yesterday, the stock closed with gains of 3%, and we witnessed long positions here as well, while long unwinding was seen for Jindal Steel and Power, the stock which fell after the development around the Supreme Court hearing came by. And in terms of FI data, they've been selling for last three sessions. No respite, by the way, even if you look at the cues from the derivatives market. More shorts were added on the index futures. As you can see, we started the series with ratio of being 61% on the long, and now it's divided 50%. Even on the index options, there were more short positions taken, while adding more of put long as well as call short contracts. Neeraj.
Okay. Navneet, thanks so much for putting all of that into perspective. So a few trading positions as well that you need to monitor in the session today. Well, let's talk about how the day is set up. Pankaj Pandey, Head of Research at ICICI Direct, joins us on the show. Pankaj, good morning. Thanks for joining in. Are you taking some chips off the table in light of the risk off globally, or are you still staying put and telling investors to put in fresh money?
So, hi, good morning, Neeraj. I think a trade war is here to stay, because if you look at the trade deficit between US and China, that is about nearly close to $400 billion. And I think even with tariff hikes, what we have seen, I think the impact is going to be there. And I don't think this is an issue which is going to sort of get resolved. But whatever we have seen in terms of the impact on the markets, take for example Dow, I think we would expect that whenever these bad news had come in, the markets had bottomed out. So for Dow, I think the downside could be 1% odd. But I think overall, I don't see a resolution for this sort of happening quickly. So this is sort of going to keep troubling markets at regular intervals. But I don't expect a big sort of a negative downtick both globally and domestically, because this has been sort of an issue going on. I think somewhere down the line, after a few days of sort of volatility, markets would again look towards other cues which will drive. In fact, even domestically also, we expect that some bit of a consolidation can happen in the range of say 11,800 to 12,400 levels, given the fact that the markets have done well. In fact, global markets also have sort of done well in the recent past. So some bit of a consolidation at current levels cannot be ruled out given the overall setup.
Okay. Pankaj, what did you make of the ICICI Bank analyst meet? Almost every brokerage note that we've read has been optimistic. The question is at 500, 510, 520 levels, does ICICI Bank give you the opportunity? And if you can't comment on ICICI Bank, would you be able to tell us if there is any other private sector bank which you believe gives you the best opportunity from an investment perspective?
So being part of the same group, I will not be able to comment on ICICI Bank, but I think we like the entire private banking as a space. I think the banking as a space is in a sweet spot, given the fact that the asset resolutions we would expect to sort of pick up. So which is why I think right from SBI, Bank of Baroda, which is trading below book value, and so these are the PSUs which we like. Besides that, Axis Bank, HDFC Bank are some of our top picks in the entire banking space. I think banking is going to will be the anchor driver of the earnings over the next 1 or 2 years. And which is why I think that is one of the best places to sort of look at, even with the kind of performance what we have seen in the recent past.
Okay, so that's with regards to, well, the banking names. The other question that comes into mind, Pankaj, is what would you do with a Yes Bank? Fundraising done, people have maybe expressed not skepticism, but a bit of eyebrow raising on the nature of the investors who have come in. Not necessarily the highest quality names. The stock has gone down post that. Irrespective of what's happened in the derivative space and the trading action. At 59 odd, do you believe there could be more downside to Yes Bank, or do you believe fundamentally it gives you an option to make an investment at around these valuations?
So fundamentally, we are not chasing this stock because I think the headwinds are still there, though there has been a sort of commitment in terms of funds, but we are still not sure whether the RBI would sort of look to sort of approve all these investments. So I think the hangover for the stock is still going to remain. I think technically or derivative wise, you could have some bit of a movement both on the upside and downside, but fundamentally I think you still have challenges given the fact that one is not really sure whether RBI is going to approve all of it. So which is why one should not be really sort of chasing at this point in time.
Yeah, one should certainly not be chasing this one at the current point of time. I think almost every investor that we've spoken to has said that. Stay on, Pankaj, so much more to talk about. There are some other key stocks in news that we want to discuss. There are some very active stocks in the markets in the last few days, and we would want to get a fundamental as well as a technical opinion, by the way, with our technical experts in a few minutes from now. But first, let's go across to the research team huddle and try and figure out what are the key stocks in news today, as well as an analyst meet that was held. Not necessarily only for ICICI Bank, but also for Mindtree. So Agam and Nikki joined in to talk about that. Let's first talk about the stocks in news today, Nikki.
Sure, a couple of them. Actually, I'm going to start off with HDFC AMC, where the promoter is proposing to sell stake to an extent of 2.23%. Promoter being Standard Life Investment, and also it has an option to sell an additional 1.8% in the counter. The floor price has been set is to an extent of 3,170, which indicates a discount of 8% to the current closing price. And overall, Standard Life Investment, the promoter entity, has around 29.9, roughly 30% stake in the counter as per current filing. Bajaj Finance, that's one bit which is expected to remain in focus. Company's current exposure to Carvey is approximately to the tune of around 312. This was against the pledge of listed shares. Overall, the exposure is around 0.23% of the AUM and around 4.3% of the total exposure in the loan against share portfolio. The company now has gone ahead and filed an appeal with SAT against the action taken by NSDL for release of the pledge created by Carvey. So keep an eye out on this one. And the other one is All Cargo Logistics. This is an ET report where the company is planning to pick up or buy up to 50% stake in Gati. So do keep an eye out on this one as well. Bharti Airtel, that's expected to remain in focus given that there's a board meet today to consider raising funds, which would be mix of debt and equity. PTI earlier reported that the company could be raising funds to an extent of around 21,500 crore. In bulk deals, CG Consumer Electricals, where the promoter has been on the sell side. On the buying side, you had SBI Mutual Fund, Mandri funds among the buyer side, and IPO, the new kid on the block, CSB Bank, which is expected to be listed today. Base price was set around 195 per share, and the issue was subscribed by 86.9 times. So to keep an eye out on this one as well.
Yeah, definitely keep an eye out for that. The NI subscription number is also extremely high. We'll talk about that with Pankaj. Maybe he tracks it. But before that, ICICI Bank wasn't the only one with the analyst meet.
Yeah, so well, Mindtree had an analyst meet and they've tried to address a lot of concerns after the L&T takeover happened. And well, now that the dust has settled, the management has said that all the clients after the L&T takeover have remained with Mindtree. And the second, concern was with respect to the churn in the senior level management. And again, in this case, well, the company has said that the attrition has been taken care of through promotions and external hiring. That said, when it comes to growth outlook, it will depend on the external environment, but there are drivers which are in place, such as large deals, improved client mining. Margins improvement is something which will be in focus for Mindtree going forward. And the holdback that the industry saw in terms of spending from clients is slowly and steadily opening up. And well, double-digit growth for this particular year is unlikely on a large base, but well, they're going to do whatever they can to well provide that growth. But on the whole, the two major concerns were addressed in this analyst meet.
Yeah, well, let's see if the market buys that argument as well, or those arguments also. Or no. Agam, thanks so much, Nikki. Thanks so much for putting that into perspective. So two questions come to the fore, Pankaj. One of them is Mindtree, and I'll get to that in a bit. But first, the new kid on the block that will get listed today, CSB Bank. For somebody who's gotten the shares in the IPO, or somebody who wanted but didn't get, advice for that person as well, what would you recommend?
So in the IPO, we had given a subscribe rating to the stock. I think within regional banks, if you look at City Union Bank has been the best template one, what one can look at. It is trading at about 2.7 times adjusted book basis, has been a very pretty consistent performer. Now, for this bank, historical performance is really not something to sort of go by, but I think with the books largely cleaned up and with some of the ratios like cost-income ratio quite high, I think the bank can sort of work towards improving the operational metrics, and which is where the upside could lie. So I think one needs to sort of look at a bit longish view to sort of to stay invested in the stock. Otherwise, I think our sense is that there will be some listing gains what people can look at. So the upsides, longer term upsides could sort of come in only if somebody is sort of holding it for a bit longer period of time, because it's valued at about 2.2 times. So really do not have much of a headroom from current levels to sort of improve. Given the fact that CET Union Bank has a better template and a better historical performance.
Yeah, well, last 10 years, I think City Union Bank CAGR has been higher than HDFC Bank's CAGR as well. That's the kind of gains that this one has had. But nevertheless, Pankaj Pandey's view is that maybe, just maybe, some of the listed banks give you an opportunity to get in as opposed to Catholic Syrian Bank. Just a very quick perspective on Mindtree as well. Pankaj, since I was talking about that and Agam was talking about that, did you have a chance to look at what they said in the analyst meet?
So I think within IT, if you look at, we're largely more positive on Tech Mahindra, given the fact that the deal wins in the last quarter has been pretty good, and the digital as a proportion of their revenues is quite high, and which is where we are expecting overall double-digit kind of a growth, and plus we expect margin sort of trajectory to improve further, and it is trading at about 14 times. So relatively cheaper valued compared to Mindtree. So I think that is one which we would be sort of looking to chase.
Okay, well, bunch of other stocks that we need to monitor in the session today. Keep that at the back of your mind. There is Bajaj Finance, which is in focus because of the numbers coming out and how low a percentage of AUM that it is. L&T continues to remain in focus all the time simply because of the order inflow issues. So we'll talk about all of those. But first, get some market perspective from a trading side. Gaurav Bissa, AVP at LKP Securities, joins us right now. Penultimate day to the options expiry, as does Chandan Taparia, Associate Vice President at Motilal Oswal Securities. Gentlemen, both of you, very good morning. Thanks so much for joining in. Great having both of you on a Wednesday as always. Gaurav, let's start off with you. What's your approach to trade today?
Good morning. If you look at the indices, then Nifty was particularly having a good support at levels of 12,000 on the spot side. The put concentration still is highest at 12,000, although we have seen about 1 million positions being squared off till yesterday. There's a chance that if 12,000 does not sustain, we may slip towards the lower levels. On the other hand, there are two interesting aspects. One, 11,920, 930 has been the immediate support area. That was the initial resistance, so now it becomes a support. Second, it has a bullish harmonic pattern being formed at those levels. So again, that's a reversal sign. Three, on the Ichimoku setup, again I'm talking about hourly charts, there's a good cloud support at levels of 11,920. So if you get around those levels, keep a 40-50 point stop loss on the upside. 12,040 by tomorrow is what I would be expecting in the Nifty index. So conversely, one can even buy a 12,000 call option, which is close around 50 rupees. If you get around 35, 30 rupees, then that can also be bought as an expiry trade, and it can double from the current levels.
Okay, so you're buying the 12,000 call as well in the session today. Anything on the bank Nifty that you're doing, Gaurav?
See, Bank Nifty, there's a good support at area of 31,500. If I look at the 4-hour chart, that is a very interesting time frame for the reason that it's near the daily time frame, and it also has some amount of intraday perspective as well. So on that particular front, 31,500 is a very good support area. If that holds, then we can see a very strong upside sort of coming in Bank Nifty, maybe a 300, 400 points by tomorrow. So I would wait and watch. If it sustains 31,500, then yes, buying a 31,600 call option of the current weekly expiry would make very good sense. But if it does not, then I will have to review. There's a good support if you talk about the breakout levels, and 31,450 was the earlier breakout level. So 31,450 to 31,500. This zone is very important for Nifty Bank to continue the trend. And if this sustains, levels of 32,000 and above would become very possible.
Okay, Chandan, what's your trade today? What's your outlook today?
Yeah, first looking at the Nifty, the market has been falling from last 3 trading session. It witnessed the correction of around 150 to 200 points on immediate basis. However, major trend is positive, but it is negating the formation of high highs, high lows, and some sort of profit booking is visible from last 3 trading session. So because of that, some more consolidation and decline could be seen. We are looking it to find support near to 11,950, 900 zone. So decline can be seen near to the same, and again buying interest could emerge near to the same levels. So buy on decline could be the strategy as of now, with support near to 11,900 in the market for an up move to us. Again, heading to us 12,050, 12,100 kind of level. Talking about the Bank Nifty, yesterday it closed for the third negative sessions. And in the entire recent up move 5,500, this is the first time where it's closing on the negative note for third day. We have seen some more call writing at 32,000. So immediate swing high is likely to act as a barrier. While on the downside, it may drift towards the next major support of 31,400 kind of zone. So some sort of consolidation and profit decline could be seen on intraday point of view, but for positional point of view, this decline could be again buy as an opportunity. Talking about the trading ideas, selected to one buy and one sell. First, it is buy on Kotak Bank. This stock has given a consolidation breakout after a long time. We have seen built up of long position by around 8 to 10% with put writing activity. And as per the price behavior, the stock is all set to head towards the new high territory. So recommending to buy on Kotak Bank with a stop loss of 1620, and here we are expecting an up move to our 1720 level. Second trade, that is buy on Zee Finance. This stock has seen the decent up move in last couple of trading sessions, but profit booking is pending. It has been forming a narrow range formation, and a small decline could take it to down by around 4 to 5%. So recommending to sell on Zee Finance. This stock is also forming a negative harmonic price pattern, so that also indicates downside in the counter. One can sell with a stop loss of 347, and here we are expecting a down tick towards 320 levels.
Okay, sell and Ujjivan. Interesting call out there. Gaurav, what about your stock ideas for the day?
The first recommendation would be buy on Pidilite. We have seen the stock has been sustaining the levels of 1290, 1300. It's trading a rising channel support area. Some amount of buying is emerging at the lower levels of 1300. So on that premise, one can keep that as a stop loss play for targets of 1360. Second recommendation would be sell on Bajaj Finserv, for the reason that we have seen a strong up move coming in. It's trading in a rising pattern, but however, there's a rising trend line resistance area at levels of 9,200. So it would be conditional sell at 50 points higher, around 9150. Keep a 100 point stop loss at 9250. Immediate targets 8950. If that breaks, then it can try to retest the breakout levels of 8650.
Okay, we'll watch out for each of these names, and then of course we will watch out for some key stocks in focus as well. But before that, a stock that should be in focus is the one displayed on our special segment, Bloomberg Edge. Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on one particular stock. Yash, what's the stock on our radar today?
Morning, Neeraj. So we're looking at Blue Star, and there's a negative call coming in on the back of the MACD indicator giving a negative crossover on the weekly time frame of the chart. Now coming to what the MACD indicator is and how do you interpret it, it is basically a trend following momentum indicator, and it shows you the relationship between the two moving averages. How do you interpret it? You go long when the MACD line crosses above the signal line, and you go short when the MACD line crosses below the signal line. Now that is what we are seeing when it comes to the long-term chart of Blue Star, and this is the weekly time frame. As you could see in the lower panel, the MACD line, which is the one in blue color, that is crossed below the white line, which is the signal line, to give that negative crossover. But well, the crossover has happened. What's next? Well, the most important thing over here, and I want you to focus, is the fact that you see the yellow line over here marking the higher high on the weekly chart. Take a look at how the price has behaved and subsequently ignore the lines. Just look at the integer value of the MACD. So while the price has made a higher high on the weekly time frame, the integer value has made a lower high. Typically, this is a classic example of a hidden bearish divergence, and that is what we are seeing over here as well. The price making a higher high, but the MACD integer value, which is the green bar over here and not the lines, the green bars, that has made a lower high, which is an indication of the momentum losing. There is a small amount of support coming in at the low of its previous week, which is 775. So ideally it would be better if you go short when there is any rise, but if it manages to drop below that mark, we could see a sharp decline for the counter.
And how well has this worked in the past for this stock, Yash?
So Neeraj, 3 out of the last 6 times, with the 6th time being the current one because it has just got triggered today, it has worked extremely well because on a 1 month basis, the closing returns have been close to around 6%, and that is despite of the fact that it's not a very volumes heavy counter.
Okay. Despite the fact that it's not a very high volume counter. Yash, thanks so much for putting that into perspective. So we will watch out for Blue Star in the session today as well. You know, before I get back to the fundamental conversation, I want Gaurav, Bissa, you to dwell in on one stock in particular, and that is Zee. The last few days has been taken to the cleaners. What's the trading target for this one?
If you talk about Zee, there was the immediate support at area of 300, and as long as it's trading below 300, things are going to be gloomy for the name, and it can slip towards a level of 260 to 65. That would be the immediate area, or rather you can say that is the support area around 260. So that is the area. But if somebody wants to sell the current price, then even the stop losses are not that lucrative here. The breakdown was 300, so if you keep a stop loss of 300, it's going to be 1:1, and the stop loss is quite large. So in my opinion, one should sell it on rise. If you get around 290, a decent price to sell, keep a stop loss of 300 on downside. 260 to 65 is what I would be expecting in Zee.
Okay. Pankaj, I want you to now come in on what did you make of the auto sales numbers and anything that stood out for you in these, and also give us a long-term view on Tata Motors. What do you think somebody...
I think overall auto is still struggling. We are sort of not really positive from the perspective that the volume growth is going to be muted even for something like two-wheeler segment. The kind of price hike what we are seeing for new models under BS6 is about 14-15%. So our sense is that the volume growth, say for example in two-wheeler, which was expected to be in the range of 8 to 9%, I think could get impacted going forward. And for four-wheelers, I think the challenge still remains. Maruti is doing decently fine, but I think for Tata Motors, the challenge lies outside the country, and till the time they don't get a partner, I don't think we'll see a meaningful sort of a bounce back in the stock. Structurally, we are still negative. I think the only hope is, say for example, the scrappage policy, wherein we expect that the biggest beneficiary will be something like Ashok Leyland, because you have our sense is that you will have about 10 lakh kind of medium and heavy commercial vehicles which might sort of go off the road, and which is where Ashok Leyland might sort of do far better, given the fact that there is a pure MHCV play compared to Tata Motors. But structurally, I think we are still not very positive on the entire auto space, but we have started to like something like Exide Industries, wherein we expect that the top line growth, although could be in single digits, but the bottom line could be better because of lower raw material prices. Plus, we expect a decent replacement demand given the fact that the four-wheelers and two-wheelers did well in the past few years, so replacement demand for that could sort of come in. Otherwise, the things there's still not much of a respite. While, say, for something like Maruti is looking to hike prices, the quantum is yet not known, and probably I think that is way to sort of incite customers to sort of buy at lower prices. But I think the outlook is still muted for the auto as entire space.
Okay, we did a very interesting segment or piece on Tube Investments as a company which has hit new life highs. Pankaj, Pandey, fundamentally, do you look at Tube Investments?
No, actually, we don't have a coverage on Tube Investments.
Okay. Any thoughts, Pankaj, on any of the infrastructure companies which came under a bit of stick yesterday on the talk that Maharashtra government may stop payments? J. Kumar Infra was down 10%, a couple of others were down as well. Have you investigated this piece and what could happen to these companies if indeed payments are stopped?
So largely, I think for something like NCC, Maharashtra was contributing about 16-17%, and same is the case with PNC Infra, about 16-70% of the order inflows were from Maharashtra. So I think given the way that things have sort of been sounded out, probably we would expect some bit of a bounce back. But structurally, we are liking this entire space given the fact that for something like road players, we expect that the ordering and tendering to sort of pick up in the second half. I think anything is going to be better than what we have seen in the H1, because Q1 got impacted because of model code of conduct, and then you had heavy rains which impacted the overall segment. So H2 we are expecting to be far more better. The pace of improvement is yet not known. But what we have seen is that in case of roads, the amount of land acquisition which the government has done is pretty robust. So I think overall things are looking fine, and I think all these stocks are trading at about 12-13 times forward basis and with good ROCs. So we will be far more constructive given the fact that this entire space has not really performed. So for NCC, you had a double challenge that AP also got had its own share of problem for them. But I think if there's some relief on the Maharashtra side, I think you would see a better price performance going forward. And overall, H2 we are expecting to be far better.
Okay, I'll also want a question with Chandan Taparia on a stock like ICICI Bank, but I will do that post pre-open. Keep in mind, I would watch out for ICICI Bank today, I would watch out for Bajaj Finance today, and I would watch out for stocks like HDFC AMC because of the offer for sale and the impact that might come into that stock because of the floor price and how well it gets absorbed. So we'll monitor all of these stocks in the session today. These are the key newsmakers in addition to, of course, Yes Bank as well. But just less than 30 seconds left for the pre-open session to kickstart trade. A quick check across the Asian bourses, and those don't look very inspiring. Hang Seng is actually worsened. Nikkei 2 down about 300 odd points. Suffice to say, we'll have a start in the red. The question is, can we recover a little bit from those levels? The SGX Nifty indicates a start, which is just about 38 odd points lower. Not too much. Let's see if we succumb to some selling during the course of the morning. But here are the first rates, and well, these won't last. I can lay a safe bet that we will not have this. So never say never. I'll be really surprised, let's put it that way, if we start off in the green. For now, the ticks are in the green. Let's see if there's a bit of a course correction here. Watch out for ICICI Bank and Bajaj Finance, the two index names that I do want to point out today. ICICI Bank, very positive analyst meet. Let's see if that helps the Bank Nifty a little bit. It's a heavyweight in its own right, mind you. Bajaj Finance should also come up on your screen. Now that the numbers are known and the numbers are slightly higher than what the best of calculations suggested, is that already in the price at 6 times price to adjusted book? Maybe it is. I think the day-to-day will tell us that. There is probably going to be some activity around Zee and Yes Bank. Yes is in the F&O ban now, so I don't know how much heightened activity can happen. Zee, after the last few days, finds a slight semblance of sanity. There's some strength in Bharti Airtel. Remember, it recovered a lot of lost ground in trade yesterday, ended almost flat, and today is the board meeting for the fundraise. You might have some activity in Bharti Airtel in the session today, so do watch out for that one. But we'll give these rates a chance to stabilize and then talk more. I think Reliance Industries has this unnatural downtick in the first 1 minute of the pre-open session. That will get corrected, I reckon. 4.5% on Reliance doesn't seem to be the case. It's a very strong stock. I really doubt this would happen for Reliance. But watch out for Zee, watch out for Yes Bank, watch out for ICICI Bank. Those are the ones to monitor. Axis Bank too, by the way, has some uptake. And then the broader end of the spectrum, I wonder if HDFC AMC has some reactions already in the pre-open session. Just about 1.5%. Nothing too dramatic for HDFC AMC. Equitas, high deposit rates. That one looks like starting off soft. We'll give these rates a chance to stabilize and then revisit them. But Chandan, Taparia, on that very topic, ICICI Bank could well be the stock of the morning. I don't know how much it will react in an otherwise dull scenario. But if you were allowed to take a positional trade on ICICI Bank, would you take one today?
Yeah, sure. In fact, we have positive view on the ICICI Bank and we have recommended this stock in our Muhurat pick as a top pick. We recommended near to 451. Stock has already moved by 15%, but still we believe that further 5 to 7% momentum cannot be ruled out. The good part is that supports are gradually shifting higher. Earlier it was respecting to support of 460. Now the support has gradually increased to 490 and now 500 level. So as of now, on immediate trading point of view, one can go with long position by putting support of 500. Upside first, we are looking to surpass the immediate swing high of 520, then a fresh rally towards 545 kind of level. So one can look at ICICI Bank for immediate as well as the positional trading for target of 520 and 540, and this is a good bet for trading and the investment point of view.
Okay, we'll watch out for these names. Pankaj, the last few days I've seen some traction coming back in the metal names. Yesterday was an off day, and maybe if the trade war concerns come back, then these stocks might be under a bit of a cloud. Is there an investment idea within the metal space, Vedanta, Hindalco, or some of the steel companies?
So largely, I think metal as a space has been quite volatile, and I think with this trade war issue sort of still hanging around, I don't think one can look at a clear buy in this. But we are consciously looking at something like Hindalco, given the fact that probably this company would have a good role to play if we were to sort of phase out plastics and something what has sort of panned out in a market like US, say for beverages and other products. I think can happen in India as well. So that is one which we are sort of looking, but I think at this point in time we are still not chasing any of the metal names. While the outlook in the second half could be slightly better, but then again I think one should not be really expecting beyond technical bounce in some of these names. So I think it's still sort of avoid given the fact that there's a bit of price performance already.
Okay, Pankaj, one last question, and that is on the rating agencies. These are not the stocks that are really fancied, but do you think a company like CRISIL, for example, might be a good investment candidate, or for that matter, even a CARE Ratings?
I think for CARE, we had coverage on the stock which we had dropped. I think rating is a business of trust, and somewhere down the line there was a trust deficit in case of CARE. I think for CRISIL, the stock is already well priced. Plus, I think rating as a business has not been sort of growing in double digits. So which is where the other business has been sort of doing well. So which is why we will not be chasing rating agencies from that perspective, but yes, within rating agencies, CRISIL obviously is the better one to sort of look at. But I think since structurally you're not expecting double-digit kind of a growth rate in a rating as a business, one should not be really sort of actively chasing these stocks.
Okay. Appreciate, Pankaj, your time. Thanks much for taking the time out and joining us and giving us your perspectives. Now, I would want a lot of trading views from both Gaurav, Bissa as well as Chandan, Taparia, and just a couple of them before we get back to what is arguably the big listing of the day, that is CSB Bank. Chandan, Taparia, a stock that has been very active for the last 1 month is Biocon. Yesterday had some positive news flow as well. Have you looked at it, and do you believe that there is a slightly medium-term potential here? What would be your, say, 2-week, 3-week or a 1-month view out on Biocon?
Yeah, in fact, we have seen buying momentum in most of the FMCG counter in last couple of weeks. In fact, the Nifty Pharma Index has bottomed out by forming a inverse head and shoulder pattern which has bullish implication. Already we have seen a strong rally in Biocon from lower level in the last week after the formation of narrow range bar in weekly scale. So setup is quite positive. In fact, the volume is continuously increasing from last 4-5 trading session. Yesterday it made high near to 299 and drifted lower. So I believe the setup could be positive. 275 is support. We are again looking for a test of 300 and 315 levels in the Biocon.
I just want to very quickly, Gaurav, Bissa, get your view on one set of names, those infrastructure names. I'm not asking you if you would buy them. I'm asking, would you stay away from any of those names because they've corrected quite a bit. Some people might get tempted to buy a J Kumar, Dilip Buildcon. Reliance Infra has corrected quite a bit as well. Not in the same league, but I'm just saying, would you stay away from any of these names?
If you look at these names, then yes, I would be staying away. If you talk about Reliance Infra particularly, then it has been either on the upper circuits or the lower circuits, so it's very difficult to trade these names. But I would be away. I would add even NCC on for that matter, because we have been getting a lot of queries from our clients as well. How does the NCC look? The thing is that you can see a spike sort of happening, but there's no trend reversal happening here as such.
Okay, no trend reversal. Keep that at the back of your mind. A lot of people will look at the prices of an NCC about 6 months ago and then say it's fallen so much so it's worth a buy. Please do your homework before you go out and buy. Now let us try and help you with your homework on CSB Bank. It's the listing. It will be listing on the bourses today. The bank has an issue price of 195 rupees per share. The IPO subscribed 87 times. Shefali Malik is joining us with more details. Shefali, what should people expect?
Well, a sort of a bumper listing or, a lot of premium over the issue price. That's what we can expect from CSB Bank listing today. It got a very bumper response, a whopping 87 times subscription to the issue. And out of that, the qualified institutional buyers got a subscription of 62.18 times. In the non-institutional investors category, it was a subscription of 164.68 times. And the retail category, 44.5 times. Remember, the issue was open between November 22 and 26, and the price band was 193 to 195. So the issue price has been fixed at 195 times, and the total offer size was 410 times. So I've done a pricing scenario. So the issue price has been fixed at 195, and there's a premium of 60 to 68 rupees per share that I've heard, over the issue price that's been going on. And basis that, the market cap works out to be 3382 on the issue price. And if it's a price of 255 rupees, that is a premium of 60 rupees. The market cap post issue would be around 4400 crores. And at 263, which will be a premium of 68 rupees a piece, it will be around 4561 crores. And price to book at the issue price based on September 19 book value, price to book value ratio comes out to be around 2.4 times. If the price is around 255, then the price to book would be 3.1 times and 3.23 times in the case of a premium of 68 rupees per share. So we look forward to, because it will be really interesting to see how the pricing actually rubs off on some of the other peers as well, such as Federal Bank, South Indian Bank, etc. Because remember, one of the concerns was that in case of CSB, some of the metrics look slightly, lesser competitive, if not weaker than some of the peers, but its price to book ratio is working out to be higher. So for instance, if for CSB, if it's around 3 times, Federal Bank that trades at about 1.4 times, South Indian Bank 0.6 times. So it'll be interesting to see how CSB lists and how the peers also react.
Okay, thanks a lot for that, Shefali. So watch out, expect a bumper listing. Let's see how the peers react. I must say, when the issue started, everybody said instead of CSB Bank, go out and invest in a Federal Bank and a DCB Bank, etc. Just look at the last 15-day performance of a Federal Bank as well as a DCB Bank, and I really doubt that they've done too much. So Federal Bank has been flattish the last 1 month. In the last 15 days as well, went up a little bit and came off. DCB Bank, again, a very flat move the last 1 month. So it's not necessary that every time the binary plays will come out and give you traction. At times, just betting on the one which is in focus might help. Let's see the kind of listing that CSB Bank has, and then let's see if the others play a bit of a catch-up. But we are minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, HDFC AMC will be in focus. Promoter Standard Life proposes to sell 2.23% stake with an option to sell an additional 1.8%. The floor price of 3,170 rupees per share is an 8% discount to yesterday's close. PTI reports that Bharti Airtel may raise close to 21,500 crore rupees via debt and equity to repay the AGR dues. The company may approve the fundraise at today's board meet. In its first analyst meet after a decade, ICICI Bank lays out focus on profitable growth, ROE and partnership model. Mindtree held an analyst meet as well, saying it has retained all its clients post the Larsen & Toubro takeover. HDFC Bank's customers faced technical glitches for 2 days on a trot with regards to net banking services. They seem to have been restored for the time being. And lastly, CSB Bank will list on the bourses today. The IPO was subscribed, as we said, 87 times. Okay, let's just look at stocks that are doing well. And remember, I was talking about this yesterday, that Bharti Infratel, it's so volatile. It goes one day up one day, down the next. Yesterday it was down and out, day before it was out. And I mentioned that you don't be surprised if it goes up in the green. It is marginally green as yet. I don't know if it will actually gain too much. But Chandan, Taparia, it is as tough a stock to trade as any to my mind, Bharti Infratel, from a positional perspective. Let me ask you the tough one. How do you approach a trade in Bharti Infratel today? Or do you leave it alone?
See, talking about Bharti Infratel, we have seen some recovery in most of the infra names and in line with the recovery in the Bharti Airtel, Idea and all. But comparatively now the stock is getting in a range, but we believe again buying interest could emerge on the declines. The stock has got in a range, but again multiple support are visible near to 225. So as of now, the only recommendation, if it comes near to 25 kind of support, then only position can be taken for an upmove positional target of 280 levels.
Gaurav, Bissa, Edelweiss as a stock went up all the way to 135, 140, locked on an upper circuit every single day. From there, it's just virtually collapsed. It's at 108 now. What do the positions indicate?
No, the supports are seen at levels of 100. Close below 100 would again mean that the trend can go even weaker. Currently, if you see, it's forming a sort of a double top formation where you've seen the stock reversing exactly from 135 levels on 2 occasions. Last time it led to a very significant fall. This time we are down about 15-20 points from the high levels. So 100 is a very crucial level for Edelweiss. If it trades and if it closes below 100, then we will be looking for a much lower levels. But for now, I think 100 is what I would be looking at as a decent support area.
Okay, so watch out for these names as well, and in particular the ones that we just spoke about. We also spoken and addressed Zee Entertainment, so keep that at the back of your mind. Edelweiss and Bharti Infratel will be the other ones. But it's about a minute left for the markets to kickstart trade. So let me get in the top trading ideas from both our experts. Gaurav, Bissa, to you first. Your top call for the day today.
For me, it would be Pidilite. It's trading with a good support area. The trend is still positive, and this is not a name that generally falls significantly in the falling market. So that can again give you some degree of safety, some cushion. So for me, that's a stock to buy. Keep a 20-point stop loss and 40-point target.
And then what about State Bank of India? Let me first ask you for your top call. What's your top call for the day?
Yes, top trading idea will be buy on Kotak Bank. This stock is moving after the consolidation of last long 11 weeks. And this price formation indicates that a small follow-up can take it to much higher levels because it has been into the so much consolidation bend. So recommending to buy with a stop loss of 1624 and up move towards 1700 to 1720 kind of level. And talking about SBI, 333 used to be a multiple level for the counter. After surpassing it, it headed to 351, again gone to the same. So I believe that buying interest could again emerge near to 330 to 333 band in the SBI.
Okay, Chandan, Taparia and Gaurav, Bissa, gentlemen, thank you so much for taking the time out and being with us today. Appreciate your time as always. Well, we are about 9 seconds away from the markets kicking start trade. The pre-open rates are not looking as bad as the rest of the Asian screen. Let's see if we succumb to some selling pressure then in the next 10-15 minutes of trade. But here is how the markets are starting off today, this Wednesday morning. About 0.25%, so not too bad for the Sensex, for the Nifty, and for the Nifty Bank to just about 54 points, so 0.18%. Hardly any correction out here on the large indices. What about the mid caps and the small cap? The indices should first come up. Not too bad, I must say. India's, well, doing rather okay for itself, and we don't quite see the Nifty while it's the spot Nifty is sub 12,000. Let's see if it stays below this, and then there is some more pressure. But overwhelming red, very little green on the screen. What is going down? Yes Bank another 4.5% after being in the band, another 4.5%. Tata Steel about 2.5% lower. JSW Steel 2% lower. There is weakness in all the commodity names because Vedanta and Hindalco are also in the red. Adani Port was down about 4% yesterday, another percent shaved off that stock in the session today. There's weakness in HDFC Bank, there's weakness in Axis Bank marginally, and Zee and Reliance Industries too continue to languish. What is doing well? Bharti Infra about 1.5% higher, TCS about 1% higher, Wipro about 1% higher, and ICICI Bank about 0.69% higher. I reckon TCS and ICICI Bank would be the ones that are giving that support. But lot of red, just about 15 stocks in the green and 35 stocks in the red. But the stocks which are in focus to my mind, the ones that should be addressed, we should first get up the index heavyweights. Just a couple of names that I want to mark, and let's see what both ICICI and Bajaj Finance, because those are the two stocks that you need to monitor and keep an eye out for. No correction out here on either of the two names. So good start on a slightly dull day for both these banking heavyweights. Then what about the other key stocks to monitor? Well, we will watch out for HDFC AMC and the offer for sale impact. For now, about 2.7%. Let's see if there's some more pressure or this gets bought into. Remember, HDFC Life found a lot of buyers and the stock immediately recovered from those pressures on the day of the OFS. What else? Some other mid-cap stocks that you should keep an eye out for ahead of the CSB Bank listing. DCB Bank and Federal Bank not quite having the kind of euphoria, but you never know, that may change post the listing, so let's wait and watch. And then stocks which were trading close to fresh highs in trade yesterday, let's pull up 2 or 3 of them. So Max Financial slightly lower today, Polycap continues to rise, marginally higher in trade today, and Prestige Estates, which for the last 2 days has enjoyed a bumper run up, corrects a little bit in the session today. Let's see if that is going to be the case or does it recover during the trading day today. But on the back of all of these and the market spotting that we've done, we'll mark some other stocks for you, but it's important to get a large fundamental voice to talk about how is he looking at the global and the local sentiment and what would he do about investing in India. Ashwini Agarwal of Ashmore joins us right now on the show. Good having you, Ashwini. Thanks for taking the time out and speaking to us at BloombergQuint. This is Neeraj here. What's your sense? Looking at all that's happened in the globe in the last 48 hours, do you think India too could face a bit of a risk-off period in the near term?
Interesting because, we've had a nice run from the end of September. We are up quite nicely since the finance minister announced the corporate tax rate cut on the 20th of September. So, can the market take a breather given the global cues? Yes, it's absolutely possible. But, this is just guesswork. Honestly, what sentiment and flows do in the short term is very, very hard to predict. India is going through a series of policy initiatives. The government's trying to do a lot of things to revive the economy, the investment sentiment, and so on and so forth. So, should something come out of Delhi that is liked by the street, we could well be a decoupled trade from the rest of the world. That's entirely possible. So you have a lot of events coming up. You have the credit policy tomorrow. And you have the parliament going on and you have the new government in Maharashtra. So very hard to say. Yes, but if you look at the run-up that's happened since September and you look at what's happening in the world, some profit-taking appears to be a natural reaction.
And just wondering, would you extend the argument to India fundamentally as well? I know this whole correlation between growth and markets was long gone away. Even in China, I don't think that has happened. But a lot of clamor right now around that argument, Ashwini, that with GDP growing the way it is, why is it that the markets are so high? Now, what would your take be here? Should one decouple investing from necessarily what would happen to the growth in the near term or no?
So what the market is doing is looking ahead, and what we are looking at, the GDP numbers or the IIP numbers that we are looking at are backward-looking numbers. Even in the past, if you take back, try and correlate GDP growth to market outlook, there is a 2-quarter lag, in the sense that the market tends to predict what will happen 2 quarters down the line rather than get influenced by what happened in the last quarter, especially when it comes to macro news like real GDP print, for example. So, I'm not saying that the market is completely disconnected with the difficulties that the economy is facing. But what the market implicitly is saying is that the government is trying to do things. The corporate tax cut is something which is positive. It's hoping for a few more goodies to come out of the government. And it is hoping that the consumer demand will revive over a period of time. So what the market is doing is looking ahead rather than worry about the latest number that is a backward-looking number.
Okay, so Ashwini, I buy your point completely. I'm just trying to wonder if indeed in all our wisdom we believe that the market is looking 2-3 quarters down the line, and Mr. Market usually knows best. My question though is, from this 4.5 number, and assuming that it's the nadir, what leads us higher? As of now, even the high frequency indicators are not quite showing any signs of a pullback, be it auto sales, be it credit growth or anything else. So what leads this recovery on growth?
Yeah, so there are a couple of things. So while you are right that if you look at the three big components, whether it's government spending, whether it's consumption, whether it's investment, if you look at the three drivers of growth, none of the drivers seem to be firing at this point in time, and there seems to be no apparent reason why one of these will start to fire in the near future. So number one, I think the recovery will be a soft one. So, can the GDP growth go back to say 5% or 5.5%? Possibly. Can it go back to 7% or 7.5% over the next 2 quarters? Seems a little unlikely. Having said this, what I would also like to say is that we've had a bunch of factors that came together in the last 6 months. You had general elections. Usually during general elections, we see cut back in a lot of government spending. We see lethargy in government decision making. We see the government machinery getting very busy with elections. So that has an impact on your growth parameters. And then you had a very unusual monsoon season where monsoon started late, were very heavy rains in large parts of the country and significantly extended. The dislocation that this monsoon has caused, whether it is on inflation prints in the short run, whether it is on production of minerals, whether it's coal or limestone for cement, etc., or it's on construction activity, it's very hard to separate what was delayed because of an extensive monsoon and whether all of it was actually a negative demand impact and a cutback in government expense impact. So my sense is, as we go forward over the next 2 quarters, 2 or 3 things will happen. One, I expect some amount of financing availability to normalize. I think the Reserve Bank of India and the Government of India have rightly identified that the paucity of finance in the non-banking finance sector is a key reason behind slowdown of discretionary spending, and they're trying very hard to bring that to a normalized level. Interbank liquidity is quite good. Over a period of time, if these efforts bear fruit, you should see easier financing and therefore some consumption coming back. Second, I think you will see some normalization in terms of construction activity, in terms of mining activity, which had slowed down because of monsoons. Whether you will see a year-on-year positive number as versus a quarter-on-quarter sequential improvement, that's harder to say. I'm more confident about sequential improvement. I'm less confident about year-on-year improvement.
True.
But if we turn our memory back to what happened in Q3 and Q4 of fiscal 19, things had started to slow down. So in many industries, you'll actually start to see year-on-year growth rates. So one of the reasons why you saw a very low GDP print also was because your base period was a very strong period. So I think a combination of these factors will allow some growth to emerge. Obviously, there are fiscal challenges. I don't think private sector investment demand is going to take off in a big hurry. But at the same time, I'm hopeful that privatization will proceed, which might provide the government the finances that it lacks today.
So from a market's perspective, Ashwini, would you believe, I'm starting off with the minutiae first, would you believe that this whole disinvestment drive and therefore the PSU stocks might actually provide a flavor? You know, Ramesh Damani was talking about it the other day, that he was citing back to 2004 when Arun Shourie started off that whole process and what it did to the PSU space at large. Do you think the same can happen this time around?
Let's see. So the PSU pack is also quite cheap today, along with a whole bunch of other sectors and other type of companies. If we see a significant interest in the 3 companies that the government has stated that it wishes to privatize, BPCL, Shipping Corporation of India and Container Corporation, If the prices that are paid for these assets are interesting from a secondary market perspective, then I think you might see a revival. But there are PSUs and there are PSUs. There are some PSUs who have a very strong fundamental position in the businesses that they deliver, and there are others that are benefiting from a regulatory arbitrage. And my sense is that anybody who's benefiting purely from a regulatory protection or a natural monopoly, those assets may not get revalued so quickly. But yes, there could be some re-rating for a few stocks if these privatizations go off well.
Would that be the same argument for telcos, that there are telcos and there are telcos, or just because there are three players and there is a bit of a uniformity around tariffs, that you might see some natural upticks coming in because ARPUs will necessarily move higher now?
Well, in telcos, I think it's a the equation is much simpler because I think it's the same end market. And the pricing improvement is also reasonably uniform across the board. So then you have to just look at who has the greatest financial leverage from a stock price perspective. If you want to bet on the sector from a pricing discipline staying kind of a view. Of course, that's a very short-term outlook. In the medium term, you have to look at who has the ability to come through the financial mess that at least two of the large listed players are going through right now. So we'll have to watch that space a little bit carefully. In the short run, of course, whoever has the highest leverage will have the highest upside purely because of the leverage effect and higher prices.
Now, I was just wondering, Ashwini, that do you reckon that this move, this concerted move of sorts, leads you to get the confidence that we might be entering into a cycle wherein people would make money over the medium term, and by medium I mean 4 or 5 years, into the telcos now? It's a sector that has been neglected for long.
If you structurally think about it, three-player market with a large population and increasing usage obviously makes for very attractive fundamental drivers to the industry. I think the challenge continues to be the balance sheets. Even though the price improvement that you have seen till now is obviously a relief relative to where we were immediately after the Supreme Court verdict on AGR. I think the full fixing of the balance sheet is still some time away. You need further price increases, you need significant price discipline in the industry to survive for the next 2 or 3 years for sustainable amount of money to be made. The return on capital employed and the return on equity numbers for these businesses will continue to look very poor despite the price increase that we've already seen, even assuming that some more price increase comes through. So it's purely a question of, how much of price increase will you see going ahead, and if reasonable ROCE and ROE numbers will start to emerge. It's a very difficult proposition at this point in time from making a call on a long-term investment view on the sector.
But it's great to get that insight from you on how do you look a sector how do you look at a sector or a theme like this, Ashwini. And thanks so much for that, and thanks so much for talking to us today on BloombergQuint. Really appreciate your time. Look forward to having you more often.
You're welcome.
That's the view from Ashwini Agarwal of Ashmore. Well, investing in specific pockets as well. Would have loved to talk about autos, but what we'll do that is talk about autos on the other side of this break. The market's not as bad as the rest of the Asian screen, but we take a break. We come back, get a sense on the automobile demand on the ground from Shashank Srivastava of Maruti Suzuki. He joins us next. That's a very important conversation. And then talk about the impact of a delayed sugarcane crushing season in Maharashtra with Avinash Verma of ISMA.